Boom, 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 boom. Traders, yes. Welcome. All right, tell me, am I your trader for life? Tell me below. I want to see it. I want to see the comments. All right, pat me on the back here. I deserve it. I'm your trader for life, or at least I want to be. We take a specific technical, powerful technical concept and do a deep dive into that concept. These are technical concepts that I've been using for the last 30 plus years in my trading career. These are some of the concepts that form the bedrock of all of my trading decisions throughout the day, throughout the weeks. And as I've always told you, every single tactic, every single technique, every single concept that I will teach you, share with you, is universally applicable across all markets. So even though I will predominantly focus on the equity market, these concepts are applicable across all markets. Number two, these concepts are applicable across all time frames. So even though I might focus on one specific time frame, just to use that time frame for the basis of teaching you, for the purpose of teaching you, it doesn't matter what time frame on a chart you're focused on. These concepts are universal across all markets, across all time frame. Take a look at my play. You see that? I'm already up $1,700 in the Apple short here, but I don't want to hold on to this very much here. So you've got now it's 278 is the gain. This is the open gain, okay, in the play. So, but maybe I would love it to get a little higher, because if it goes from here, I'll just make smaller gain than I expected to make. All right. We'll see. Now it's 638, 878. Here we go. Come to Papi. It's opening down here. Tesla opening down from its 200 period moving average. All right. There's my short already, guys, on the Tesla. Boom. Whew. Like it. Come on, baby. You can do it. Boom, boom, boom. Oh. Yeah, $2,300, guys. Not bad. Not bad. Ah. One share stuck there. But okay, not bad, not bad. Anybody grab that Tesla with me? Perfect position, guys. Perfect position. Opening right at that flat 200. Remember I told you flat 200s, narrow state. You want to grab these early and boom. All right, not bad. Not bad at all. Um, one more left, boom, out. So so basically, guys, what I did here was when this was moving up, I just had orders for short right into the 200. As I was telling you, here's your resistance. All right. That's your resistance zone. Okay. I was telling you, watch this area here. I want to see how it performs. And so I just put orders in now. Now, I know a lot of you aren't ready for placing advanced orders. So those who aren't ready for that, you're going to short you can potentially short the elimination of a portion of the green. Okay, that's still dropping. Maybe I got out a little too early here. But the playing off these support, nice JR.
JR took the apple as well. Nice, nice, guys. Boom. Apple. Love it. So JR, did you play that the same way I did? Did you have the orders up there and let Apple move into your short orders? Did you do it like that? Beautiful. I teach my traders so well. I love it. I love it. All right. But wow, I got out early. I was not expecting a drop like this, because normally when you get a powerful bar like that, guys, normally when you get a powerful bar like that, the drop doesn't drop very far. But in this case, wow. So guys, what I'll look for, if Apple bounces back up into this redness, you see the power red bar, I'm going to look to short Apple again. All right. So if we were to bounce back up into this area, I might, depending upon how it bounced, I might look to short again for another drop to the downside. So we'll see how that happens. But guys, what about the UAL? What did that do here? Let's see. I had to leave it. Okay, so we never broke above the high of bar 1, so no buy. That would have been a buy. But, or I could, if I do it with a different color here, this would have been a buy above the high, but no buy. Now, you can potentially look for a possible buy on the pullback. Remember, this is your yesterday's or the prior day's price data. That will often serve as some form of support. And as you can see, we come right down, boing, and start bouncing back up off of that support. All right. Let's check a few other things here. What's the BA doing? The BA snapped back to the upside here. Again, we still have this resistance zone here. And you don't want to take a look at Twitter. What's Twitter doing today? Little tricky here. Twitter is stuck in the trap zone. So here's your 200. Here's yesterday's or the prior day's data, and we're in between the ceiling and the floor. So you want to be careful with plays in the trap zone. The best plays are outside of the trap zone. The best plays are here and there. All right? It's the best plays. AMD. Someone's asking about AMD here. All right, so look, there's two ways to play this. Now, so we're here, we're under what we call the Fabulous Four, right? You guys know that. I teach you the Fabulous Four. Now, you see these lows? If we break to a new low, it's a short. You're going to bet to the downside. But if we take out this red bar very powerfully, it's a potential long with the idea that it can go back toward the resistance. But it really depends on how this red bar is taken out. If it's taken out powerfully, it's a buy. And what do I mean by that? If it creeps up there like this, boom, 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 that's not taking it out powerfully. I mean, boom, like one solid, powerful bar, that would be a buy. But it looks like it's weakening here, and the break below the low would be a short. All right? If you want to try that, I like it. I like it. I like it. All right? And you could listen, you could keep you can keep your possible loss on the play tight. So there's 3 stop options on this play. All right. The ultimate stop is if you break above this red bar, then you would just exit the trade and take your loss and move on. It's part of trading. Guys, losses are part of trading. You're going to have losses. You will never be able to eliminate them. The thing is that you want to lose correctly. This would be a correct loss. If that's a little too uncomfortable for you, you can drop it to this tail. That saves you a little bit more. All right. But if you really wanted a super tight stop, you drop it. If you were to short here, you drop it right above the bar's high. Now, this is not ideal because nothing's really still wrong with that. You're really wrong up here. But there might be a scenario where you need to keep the loss really tight. All right. All right. So that's the AMD. What else are you guys doing? Irene's playing C. All right. Beautiful, beautiful move off the open this morning. I love this. Irene, did you get in above bar 1? All right, cool. Irene, you took how did you play the C this morning? Did you play above the green, above the high of the first bar? How did you play it? 6606? All right, cool. 6606. So you got in above the high. All right, I'm assuming you're protecting yourself below the low. You're not going to lose more than 1 bar. Okay. Did you take some profits on this move to the upside? Beautiful. Like, so did you go in with 2 lots and take off 1 lot? That's a perfect profit take there. Very proud of you, Irene. Beautiful. All right. So did you take it all off there, or did you take part of your trade off on the profit taking move up there? Oh my God. Ladies and gentlemen, we have an aristocrat here. Irene's playing like a pro. All right. So Irene, you took, how many lots did you take on the C here? How many lots? You took 1 lot. You added here on the hidden RBI. Irene, that's very, if that's what you did, that's very fancy. Very fancy. I love it. Boom. And then profit take here. But how much did you profit take though? All right, so you went in 2 lots, added 1 lot. How many stop under bar 1, and what profit take here? But how many profit take? You're probably in the trade and I'm asking you questions and you're typing at the same time, right? But I love it. Guys, I want you to understand, especially those of you who are new, traders, if it's not a scalp trade, right, which is what I did with Apple today, all right, if it's not a scalp trade, you want to try to add to the play if you're playing the play to be more than a scalp trade, all right? So what you're really trying to get is that. So you want to buy, add somewhere, take profits, and then let the stock fall back. So see, this is what Irene did. She bought, added, 2, 1, stop. So 2, 1, stop. Okay. Profit take. Let the stock pull back on you. Let the stock pull back, and then hope for the secondary move. And that's exactly what C seems to be doing right now. But the key, guys, here is that once you take the profit, so once you take some profits, you move your stop to break even so that on the rest, you can't lose money. You'll gain this profit, but you'll break even on the remainder of your position. All right? Does that make sense? So what you can do, guys, look, here's what you assume. You assume that you buy 2 lots, stop, add 1, and then you take 1 or 2, whichever one you want to take. So in your mind, if you take 2, you have this 1 left. So then you would move your break even to the 1. You understand? So see, what we're always after is that. That's what we're always after. That's called the whale. All right? So here's the formula again. You buy, you add, you take, your stop is here. Once you take, you move your stop to break even. All right? And then you let the stock pull back on you. This is your stop that's protecting you. And then you want this move to occur. But sometimes it does, sometimes it doesn't. That's why the stop is moved here. So in the case that it doesn't and you get stopped out, the remaining is a 0 play, but you still have the winning portion of the play. All right? And so out of 10 plays, maybe you get 7 that go and 3 that don't go. All right? So what I mean by that is this one looks like it's going, so that's going to be one of these. But if it fails and stops you out at break even, that's going to be one of these. And it just becomes a numbers game after that. All right? But great play. I like it. All right. So what you also want to do is if this pullback is healthy, you want to do what Irene just did here. All right. She says you want to add. So you want, here's the formula: buy, add, profit take, stop, move stop to break even, and then new high, profit take. Boom. So up here, Irene will take profits, right? And that's that formula. It's the same formula over and over again, guys. Look, boom, boom, buy, add, profit take, stop, move stop to break even, add, profit take. Does that make sense? That's beautiful, right? That makes sense? You guys got it? Whale complete. Great job, Irene. Great job. I love it. I love it. I love it. Beautiful. Now, let's go to the next thing. Now, you see how C has come up back toward the high. And remember, we moved our stop from here to break even. Well, now Irene needs to move the stop to the pivot. So once you move back toward the high, you raise your stop now. So now you're going to get stopped out with a profit. But we're hoping you don't have to use that, and we're hoping that you can take profits up there in new high territory. Now, Irene, is your order already there, right under 67 to take profits? It should be right there. And you should get it there. You should get it there right under 67. All right. All right. And guys, you use those hotkeys. Get your orders in the market in advance. That's what JR and I did with Apple today, getting the orders up near the ceiling. Oh my God, this bad drawing. Getting the orders up in the ceiling area before it gets there. Boom. Right? Same thing taking profits. If you were buying Apple here, you want to have your sell orders up there near the ceiling before the stock gets there. Boom, 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 out. Okay? That's the highest level of professional executions, when the orders are there before the stock gets there. Andare, you played the Apple the same way, but which way? Did you buy it first, or did you short on the way up as JR and I did? Awesome. Okay. Teaching my traders well. I love it. I love it. My little babies. Cuckoo gaga. Little babies. Cuckoo gaga. Ah, it's what you gotta see. My baby. All right. All right. What else is going on here? Oh, we've got gold on the move today. Guys, look at Oracle. Look, you have Oracle producing somewhat similar to what C's producing. Remember, this is what you're after. Don't ever forget that. We're always after, if it's not a scalp trade, and that's something I should explain as well. This is not a scalp trade going for this. Now, this move is made up of three parts, right? Part one, the initial move. Part two, the pullback. And part three, the new high, right? So 1, 2, 3. And once you get that, your morning is over. You're done for the day if you want to. Once you get, I call this the whale. Once you get the whale, you're done. A whale can be $300. If you're at a certain level, it can be $800. It can be $3,000, depending upon the size of your account, right? So the idea is to get the whale. And the whale usually forms inside of the first 20 minutes, sometimes as much as 30 minutes. All right? So we are heading to a whale complete in Oracle, right?
This could have gotten some traders short, but I didn't trust the morning. It was my trader's gut. So I saw Square's turn around. I watched its turnaround. And I decided, listen, I'm going to give you the price, okay? I decided to short Square at 96.10. Look at this chart. Now, this is with all of my IFT Black team, right? 96.10. I said, listen, I'm going short Square. And I tell them the reason. I tell them that from the low, assuming that that low is real, this move off the low is very extended. And while I didn't mention this in detail, I'm going to mention it to you. It's on its third leg. So every move, every mature move has multiple legs. So multiple phases, right? So phase one, phase two, phase three. as an example. But what are these? These are pauses or interrupts in the power, interrupts. So I want you to look carefully at the interrupts here. This is a move up. Let's do it in greens so we get the true move up, then interrupt. See the interrupt there? Okay. Move up, but look carefully. Look carefully. Look at what this stock does from here to there. Interrupt. You see? Look at it carefully. I'm going to remove my markings. Look at the drop. I'm going to go to a narrower pin thing. From here, we drop and continue to drop there. All right? So most people don't see the color red there. I see the color red. I see the hidden reds. Do you understand? Do you understand that this is a hidden red? It's a hidden interrupt. We have the obvious interrupt here, the hidden interrupt there. Here's something that is going to change your trading life today. I'm going to change your trading life if you have not heard me talk about this yet. Okay? You need distance away from an interrupt in order for it to start being overbought or oversold depending upon the direction. So see this interrupt here. Starts here, ends there. A lot of people might try to go short close to this interrupt. Wrong. You need distance from the interrupt before it's really, truly ready. You understand? So a stock has an RBI, like look, Microsoft. If I quickly turn to Microsoft, see the interrupt here? If someone wanted to counter trend short this, they can't short it near this interrupt. They need distance away from the interrupt for it to be ready. You understand? So to try to, here's an interrupt. So Microsoft is experiencing from its move from the lows to the highs, right? Here's an interrupt, all right? This whole phase is an interrupt, and it's leaving the interrupt, okay? So here's the first, here's the start, here's an interrupt, here's an interrupt. An interrupt can be a brief pause, an enduring pause in the power to the upside or downside. But you have 1, 2, and you're working on your third phase. Okay? The best counter trend opportunities happen after 3 or more phases. You understand? Does this make sense? So see how we're getting distance from the interrupt? So what I'm going to do is I'm going to experiment with the short here. All right? I'm going to experiment with the short. I just went short. I'll just show you. I just went short here. See? Okay. I just went short. Now, this is an advanced or an anticipatory short to build the position. This is not what you or most of you would do. Most of you are going to wait for, if you're trying to counter trend scalp, you're going to wait for, if it's a sizable green bar, you're going to wait for half of that green bar to be violated. If it's an enormous bar, you're going to wait for 1/3 of the bar to be eliminated. And if it's a normal green, you're going to wait for the low to be eliminated to start. But the way you do counter trends, guys, is that you should really most of the time try to stage in to the counter trend play, meaning that you start off with one lot. That means 100 shares for the vast majority of you. and you build. So you expect that once red eliminates green, maybe this is not quite ready, but you're only in one lot. And so you're going to build 2 to 3 to maybe 4 lot, a 4 lot play. And you use maximum loss per trade as your stop. You don't use a technical stop. So you ease into it on every signal. All right. So we're not quite distance enough yet. I would love a little higher to get that real distance. But I'm okay starting here. Like I started here. Now you're waiting for half of this green to go. I'm anticipating as a left side trader, you're still a right side trader. All right? A right side trader waits for the true signal. You understand? All right? Now, this is just teaching you how to scalp a counter trend. This should not be the norm of your play. You understand? You should not be, your key trade should not be fighting power like this. All right? It should not be at all fighting power like this. I'm just doing this more as an exercise to show you how sometimes I take some extra gains on a play I've even gone long with. I will turn it around and go short and grab some extra money with it if it is on its third or more leg with distance and time and all of those concepts we've talked about before. But the thing that's going to change your life is the distance away from your last interrupt. Too many traders are trying to short too close to the interrupt. You understand? And that's a mistake. Here's your interrupt. Traders are trying to short there because of that tail or something like that. You're too close to an interrupt. You want distance away from an interrupt. Distance away from your last interrupt. Yeah, these are but look at the square. It's similar. It's similar, right, to Microsoft. Here's the origin. Here's your last major interrupt, and you've got distance away from the interrupt now. So 95 is going to be the round number 95, right, is up here. That's going to be a key resistance area because of your distance from the moving averages and your weight distance from the origin of the move. But notice, and you got distance away from this last interrupt. So here's the thing, shorting, the key point I think today is shorting too close to an interrupt is a problem. Shorting away from your last interrupt gives you better odds. All right? That's the key message I want to give to you today. So we had one interrupt from the low, a second interrupt here to hit an interrupt, and we had nice distance away. So I shorted at 96.10. All right. And I want to show you this. We drop after my short, right? That then forms a bear 180. Once I had the bear 180, I'm like, I'm in. This is now my trade and I'm going to milk this for everything it's worth. So look carefully at this move up into the bear 180. As it's moving up, I am getting more short because many of you know when I get a strong red bar down, I place orders to get to short more on any blips to the upside, but I place the orders above me throughout that red bar. So as the stock moves up, I'm getting more short, more short, more short, more short, and then this drop delivers the moolah. All right? That drop delivers the moolah. Guys, give me a second here. Give me a second. This is still bullish. Still very bullish. It's in the upper portion of the strength. I'd like a little bit more distance. I'd like a little bit more distance here. I'd like us to press it a little bit higher. The further we get away from here, now this could be another distance. This could be another interrupt if we break to new highs, where now we use this measurement as our guide. All right. And that would place us closer to 112.13, a little bit less, as a key spot. You know, roughly 112 to roughly 1250. We take that same measurement, put that above it, and that becomes a very interesting spot up there. It's interesting how the market moves in a measured way a lot of times, you know. But just so you know, guys, here's my gain. All right, it's tiny. I'm close to break even. So you've got now it's 278 is the gain. This is the open gain, okay, in the play. So, but you know, maybe I would love it to get a little higher, because if it goes from here, I'll just make smaller gain than I expected to make. All right. But we'll see. Now it's 638. $878. There we go. Come to Papi. But you get the point. I hope you get the point anyway. That so I'm placing, guys, remember this is a scalp play. So I'm placing orders. So I want this to drop into my orders, you know? But I just think we're higher. I think we're higher, guys. I could be wrong. That's why I start now, you know? So I grabbed a little bit off down here as I began here like that, right? And this could drop to the 200, but that's not the shore play. The shore play is this zone here. So I got my first layer here. But when I was up about 1,000, I pulled some off there. Just try to figure out how to determine an interrupt in real time. Can it be like a shakeout? No, you don't have to determine an interrupt before it happens or while it's happening. This is something that a lot of traders get wrong. That there's this notion that you need to know about it in advance or really early. No, you notice it way after the fact. Like once you leave the redness, oh, you say, okay, it's an interrupt. That's when you know. You don't need to figure out like, wait a minute, is this red bar going to be an interrupt? You understand? No, after the fact. You look back at it. Oh, that's an interrupt. Some of you know the story. Many years ago, back in the 1990s, I had offices. Every trading firm, if you were a trading firm, you had offices. There was no internet at the time, right? There was just T1 lines and fractional T1 lines that you ordered to send to your dedicated T1 lines that you would send to your trading location so that you'd have an open line for data and all of that stuff, right? So you had to trade from an office unless you could afford to put that into your house. So anyway, I had offices, and traders would travel to my offices and spend 6 months, a year, 2 years, whatever, just to trade in my office, to be with me every day, to trade every day. And there was one trader from Germany, and he would always say, Oliver, he would come over to my desk and say, Oliver, do me a favor. I'm saying, what? He says, can you draw a line right there on the chart? I was like, what? He said, yeah, just take your pen and draw the line right there. Can you draw it right there? I said, all right, let me just draw the line right there. He says, all right, good. And then he would go back to his desk. So he did this a few times. Like he would come over to Oliver, can you do me a favor? Just draw your line right there on the chart. Just draw, take your pen and draw a line. All right, but why? He's like, no, just draw the line, please. And draw the line, and he'd go back to his desk. And then I realized what he was doing. He felt like whenever I drew a line, the stock would obey it. Like I would say, okay, listen, here's the interrupt. We need to get at least up here. Then we can start shorting up here. And I would draw the line, and he'd be like, my God, man, every time Oliver draws the line, the stock obeys. Oliver, can you draw the line, please? It's funny. All right. Guys, I got rid of a little bit more as well. Here. All right. So now we move up. Like I told you, this is powerful. So the real play for me is if this leaves, the real play for me, now that I've gotten light again, is the measurement from here to there. Now, in reality, guys, what's the better play? The better play is long, always. I'm just teaching you skills for doing counter plays right, which have their place. Do you understand? They have their place. All right, not that you should be fighting the trend most of the time, but there are intelligent times to go against the power. And I want you using some of these concepts I'm teaching you to know when it's okay to maybe try that. So opening down here, Tesla, opening down from its 200 period moving average. All right. There's my short already, guys, on the Tesla. Boom. Whew. Like it.
Come on, baby. You can do it. Boom, boom, boom. Oh, yeah. $2,300, guys. Not bad. Not bad. Ah, one share stuck there. But okay, not bad. Not bad. Anybody grab that Tesla with me? Perfect position, guys. Perfect position. Opening right at that flat 200. Remember, I told you flat 200s, narrow state. You want to grab these early and boom. All right, not bad. Not bad at all. All right. All right, there's the closing position there, guys. 2,374. That was in less than 2 minutes, less than a minute and a half. Not bad. All right. Okay. So I'm going to focus largely on what you're doing now. If I can, there's the power of that. There's the move up in Tesla, up that bar. What else are you guys doing, guys? What else are you guys doing? Let me get this Tesla out of the way here. I don't understand this. Whoa. Here, guys, take a look. I'm going for the, shoot. 1,000 here. Boom. All right, brought gains up here to 3,300 there, not bad. But again, guys, you know this strategy here, shorting in the perfect position. The move back up is a fake move. There's that micro whale scenario, right? That I'm always teaching you. Drop, rally is fake, drop again. All right. Drop, rally, the first rally is fake, you'll drop again. All right. You guys know that, right? You know that's one of our bread and butter plays, right? Yes. Okay. That is something that you can basically make money from almost every single day of the week. You'll find that scenario. All right. Now, you'll also find the reverse scenario, right? So this is not exactly the same, but take a look at Meta, guys. Take a look at Meta. And what you see is the surge. Now, I want you to always look to the left, right? Always look to the left. And what you see is clean air to the left, right? Look at that Meta go. Boom. Look at that. Look at that Meta go. Clean air to the left. Who has Meta, guys? Who has Meta? Who's making money on Meta this morning? Talk to me. Anybody making Meta? Paula's got Meta. Yes. Tony nailed Meta. Nice. Alexander nailed it. Nice. I love it. All right. I know it's a little high for it's a little high price for some of you, but some of you are able to. This thing is rocking. All right. Apple. Who? Whoa! Look at how beautiful Apple is. Who grabbed Apple this morning, guys? Who grabbed Apple this morning? Muhammad grabbed Apple. Stanley grabbed Apple. Oh my goodness! All of you grabbed Apple. I'm the only one who's not an Apple. Boom! I love that. Flat 200, tight, narrow, fat 4.
Muhammad says, I told you about Apple a long time ago. That is beautiful. That is picture perfect. I'm proud of you. I'm proud of all of you for getting that. And, you know, I love when a lot of you are in the same play because it tells me that you're thinking the same way. You are approaching things with a method. It's not guessing. It's not, you're not winging it. You know what you're doing. You're trading like a freaking coordinated army. The OV army. Yeah, I like it. Beautiful. Boom. OV army. Yeah. All right. Mike is saying MS. What do you see in MS here? Oh, that's beautiful as well. Tight, fabulous 4. We start in a decent position under that fabulous 4, and there is your drop. I love it. Nice find there. Kaner, Mike, nice. Kaner says, I made $1,300. Guys, with the zero added, what are your gains here so far? We are 7 minutes into the trading day. What are your gains? 700, 1,300, 2,500. Add that zero. $4,320, $1,500. I love it. 133. All right, I'll take it. You can buy me coffee, Alexander, with that. Let's go out for a coffee. All right, not bad. 3,000 and climbing. Nice. Vala, $70. Okay. We can add a little Danish with the coffee with that. I like it. All right. All right. Nice job. Nice job. 1,300. I love it. All right, guys. So let's see where things lie now. Now, guys, listen, it's crazy, right? That 7 minutes into the trading day, it's almost like the first part of our workday is gone, is over. Microsoft, guys, anybody grab the Microsoft play? And you're done. And 7 minutes later, that you guys have seen that meme, right? And you're done. And it's over. And it's gone. All right. Paula, you did the Microsoft, your first trade was the Microsoft? Who did the Microsoft, guys? Here's that flat 200 I told you about. Here's that beautiful move off the 200. First color change. Guys, I was teaching traders this weekend about jumping in to your bar, protecting yourself, and adding on the first color change. These are normal things that you do. Jimmy did the Microsoft. Paula did the Microsoft. Nice. All right. Did Tesla turn on us here? Tesla reverse. Oh, Tesla did reverse on us. But guys, remember, once you get that 1, 2, 3, 1, 2, 3, 1, 2, 3, if you're not out there, you are susceptible sometimes to a big reversal. Now, this is kind of weird, but here, 1, 2, 3. If you see it, let me open it up a little bit because we have guests that may not be familiar with this, but drop, rally to that tip point, and drop to that low. That's it. 1, 2, 3. You're done. 1, 2, 3. You're done. 1, 2, 3. You're done. And these are beautiful income. This 1, 2, 3 is a beautiful income producing approach because 2, 4, 6 minutes. There's our 7 minutes, right? 6 minutes. We have more money than many people in the world have to work an entire month for. That's crazy. That is insane. Beautiful. That is a very powerful. Jeffrey saying guild. Let's see if what guild is do. Whoa, I like that. That power surge, that violent surge off the 200. basically makes your trap zone disappear. All right. You guys remember that concept, right? Power surge off the 200, location doesn't matter. Yes? Tell me, talk to me. Power, violent surge off the 200, location doesn't matter. Trap zone doesn't matter. That's something you can go with. Very, very beautiful, powerful move today. Anybody get that, by the way? Did anybody play this? Guild? I'm curious. Jeffrey, nice. You're the one who brought it up to me. Nice. Beautiful. All right. Love it. Love it. All right. What else are we looking at, guys? What else are we looking at? Talk to me. Khalib is saying AMD. Let's do the AMD here. AMD looks a little stuck here. I do see the very powerful drop here. So let's see if this is going to stay trapped or give you that secondary leg to the downside. You are under the 200. We'll see. But now, guys, whenever something has a powerful move on both sides, you can look at that as the trap zone. So let me give you an example of that, right? So you have a scenario where you had this huge run up, and then you strong run up, but you also had this strong drop. So now your stock is trapped between the beginning of strength here and the beginning of strength back to the downside. So it's trapped between these two origin points, right? More or less. And you'll get a lot of rattling around a lot of times until at some point you either break, right? But so this drop is nice. It's kind of painting over all of these things. So you could get that nice drop, that nice follow through 1, 2, 3. Remember, that's what we're playing. 1, 2. Now we're waiting to see if we get that 3. All right. Good job. Good find. Okay. So remember what you're playing, though. In a way, you're playing. Well, are you playing leg 2? This is a tough one because, you had this elongated sideways move, right? Not elongated, but you know what I mean. It's more than a couple of bars. So near 44. Oh, okay. You got it near 44. Well, then that's early. Okay, cool. Nice. Okay, good. William saying Amazon here. All right. What else, guys? What else? Uber. Trevor's in Uber long. All right. These I find sort of tough to trade because they start off below everything, right? So you start off below and you sear through it. So you've got half the stock's life below, half the stock's life above. I will tell you that the best trades will tend to come from when almost all of it's below or almost all of it's above. You understand? So just keep that in mind. Like, so you have your meta, almost all of its life is above prior data and a flat 200, okay? Versus it splits the baby. So I do have I do have more of a difficult time with those. A, B, and B. Airbnb, again, look at most of its life is above. It's not splitting the baby. Good. All right. I like that move off the 200. And remember, guys, don't let the tails, you can always remove the tails if you're not playing the tail. Remove the tail for greater clarity. And boom, this green takes out the red. Boom, protection. Rest is history. Gotta love that sound. All right. Beautiful. Beautiful. Amazon just won't go. Yeah, but it's hanging in there. It's hanging in there. But this troublesome bar there, it's a little wounded, you know. So it's trying to work that off, but that's a little wounded there. Bar was sharp. Give you my view on Intel. Beautiful. Just doing its thing. Now, when you're in a play like this, right? When you're in a play like this, because who was in this play? Valab is asking me, but someone else was in this play, the Intel play. All right. That's right, Pratt. So, and Bernard as well. Now, what you want to make sure you do, first of all, is the 20 period moving average relevant? No, which means that you need a shorter moving average here, right? What moving average do you think we need there? What's the moving average we need now? Come on, quickly, talk to me. All right, we need the 8 period moving average, right? All right, so let's take the 8. Let's get the 8 period moving average up there. And this becomes the more relevant moving average now, right? So you've got a new high, which gives you the right to take a profit. So all new highs now are profit taking opportunities. You don't have to, you're not obligated to, but new highs, once you cross a new high after a pullback, boom, all right, or after a sideways move, boom, you have the right to take profits. To ride it out, you should always basically let the last lot, you should let the last lot be taken out by the market. So what's your combo that is the best combo from this point? Whoa, you saw that pop? Nice. What's the best combo? You guys know it. Talk to me. What is it? Big bar moving average. That's right. So here's your big bar now. This popped nicely, right? That's your big bar. Now that's really your optimal profit taking bar. Because what kind of bar is that one? What would you call that bar? That's right. That's an exhaustion bar. I'm proud of you guys. You know what you're doing. Beautiful. Beautiful. We take profits on exhaustion bars. All right. They kind of signify that you're close to the end. Not every time, nothing is every time, but most of the time.